As Target embarks on a journey to reclaim its former glory, the newly appointed CEO, Michael Fiddelke, faces a daunting task, winning over skeptical investors and customers alike. On March 21, 2025, people strolled past a Target store in Midtown Manhattan, unaware of the challenges that lay ahead for the retail giant. When Fiddelke officially steps into his role in early February, he will take the reins of a company grappling with declining sales, wavering customer loyalty, and a cautious investor base. The fiscal second quarter results, released on Wednesday, painted a stark picture of Target's current struggles. Sales continued to drop compared to the same period last year. Customer foot traffic was down, and shoppers were spending less on average during their visits to both Target's physical stores and its online platform. Fiddelke, who was announced as the successor to Brian Cornell, will soon spearhead the retailer's efforts to turn things around. With nearly 2 decades of experience at Target, he expressed confidence in his ability to revitalize the brand. "I know we're not realizing our full potential right now, and so I'm stepping into the role with a clear and urgent commitment to build new momentum in the business and get back to profitable growth," he stated during an earnings call. Although Fiddelke has not yet officially begun his tenure, he emphasized that Target would not wait until February to initiate changes. He committed to acting swiftly to restore sales growth and outlined his top 3 priorities: regaining Target's reputation as a strong merchant, enhancing the in-store customer experience, and leveraging technology to improve operations. On the same day, Target shared positive news, indicating that its turnaround efforts were already yielding results. Fiddelke noted that while sales were still down year over year, there was an improvement from the first quarter to the second quarter. He highlighted that sales trends across all 6 of Target's key merchandise categories had improved compared to the previous quarter, and the company had made strides in reducing out-of-stock items, achieving the best on-shelf availability in years. However, appeasing Wall Street will require more significant changes. The second quarter results continued a troubling trend for Target, which has tested the patience of many investors. The company's market value has plummeted from a peak of $129 billion in 2021 to approximately $45 billion as of Wednesday. At 49 years old, Fiddelke has climbed the ranks at Target, starting as an intern and holding various roles in merchandising, finance, operations, and human resources. His recent positions include Chief Financial Officer and Chief Operating Officer, and he was also appointed to lead the Enterprise Acceleration Office, a new initiative aimed at jump-starting the company's turnaround. Despite his extensive experience, the decision to promote Fiddelke from within rather than hiring an external candidate was met with skepticism. Investors reacted negatively to the announcement, leading to a more than 6% drop in Target's stock on Wednesday, bringing its losses for the year to around 27%. This performance starkly contrasts with the SP 500, which has seen gains of over 8% during the same timeframe. A survey conducted by Mizuho Securities revealed that a significant majority of investors, about 96%, preferred an outsider for the CEO position, indicating a desire for a more radical shift in leadership. Manny Chirico, the former CEO of PVH, which owns Calvin Klein and Tommy Hilfiger, remarked that investors were eager for a more substantial change. "I think the market is questioning whether the internal candidate, with Brian Cornell staying on as executive chair, is that a bold enough move going forward?" he said during an interview on CNBC's Squawk Box. From a peak of success to stagnant sales, Fiddelke's first major hurdle will be to convince both investors and customers that Target can regain the charm that once made it a model for other retailers. Customers and former employees have expressed concerns that Target has lost some of its signature qualities, such as clean and well-stocked stores, friendly staff, and eye-catching merchandise. Some shoppers have even turned to competitors in response to controversies surrounding Target's Pride collection and subsequent decisions to withdraw certain items and scale back diversity initiatives. Once affectionately dubbed Target for its ability to offer trendy and often exclusive products at affordable prices. Target transformed its stores into a mall-like experience by incorporating Starbucks and small shops like Ulta Beauty. The retailer was known for enticing customers to spend more than they intended, leading to humorous anecdotes and social media memes about entering the store for one item but leaving with a cart full of purchases. "There was a time when Target was on top of the world," remarked David Bellinger, a retail analyst at Mizuho Securities. Following the onset of the COVID pandemic, Target sales surged by over $15 billion, partly fueled by government stimulus payments. The company's stock reached an all-time high of $266.39 in 2021, but as of Wednesday, it was trading more than 60% lower, closing at $98.69. For the past 4 years, Target's annual sales have remained relatively flat, and the company anticipates a slight decline in total sales for the current fiscal year. Several factors have contributed to Target's struggles post-pandemic. Customers have redirected their spending toward dining, entertainment, and travel, all while grappling with the highest inflation rates in decades. Additionally, the retail supply chain has faced new challenges, including tariff increases implemented during Donald Trump's presidency. Target has also lost ground to its competitors. Chief Commercial Officer Rick Gomez noted during an earnings call in May that while the retailer managed to hold or gain market share in 15 of its 35 merchandise divisions in the first quarter, it still lost ground in the majority of its product categories. While some of Target's challenges stem from external factors, many issues are self-inflicted, according to Stacy Widlitz, president of SW Retail Advisors. "It used to be clean and exciting with fresh brands. That has just all changed in the past 2 years, and we've heard them talk about how they're going to fix it, and we haven't seen it," she stated during an interview on CNBC's Squawk Box. Bellinger echoed these sentiments, sharing his observations from visits to his local Target store. While curbside pickup is efficient, he noted that many products are locked up to deter theft, customers face long checkout lines, and the cashier area is often understaffed. "It's just not an easy shopping experience," he commented. One of the new challenges Fiddelke will encounter is the upcoming end of Target's partnership with Ulta, set for next August, which has been instrumental in boosting beauty sales for the retailer. Even before the CEO announcement, Target had been vocal about its plans to restore its Target image. Company leaders have pointed to signs that their strategy is beginning to take effect. For instance, a limited-time collection with Kate Spade, launched in mid-April, was hailed as the strongest designer collaboration in a decade. Gomez also highlighted the new line of Champion activewear and sporting goods, which debuted this month, describing it as really the epitome of Target. Fiddelke confirmed that efforts to enhance merchandise appeal would continue, mentioning an overhaul of the hardlines category, which includes products like TVs, laptops, toys, and trading cards. Target is also keen to improve sales in its home goods category. Fiddelke noted that new Disney and Marvel-themed bedding and decor in the kids' home line Pillow Fort, along with fresh colors, patterns, and fabrics in Casaluna, its premium bedding line, have been well received. Now, what the team needs to do is say, "Okay, we need to do more of that, more consistently, more frequently, across bigger parts of the business," he emphasized. Plans for changes to Threshold, Target's largest home goods brand, are also in the works for next year. Beyond revamping its brands and launching new products, Fiddelke's success in turning around the company may hinge on one crucial task: restoring the identity of a retailer that has long been cherished by loyal customers. "If Target went away tomorrow, you'd have a lot of disappointed consumers, millions of consumers," Bellinger remarked. "There is a true core customer who loves Target, and there's a ton of upside here, if they can figure it out. But here's where it gets controversial. Can an internal candidate truly bring the bold changes needed to revitalize Target? Or is a fresh perspective from outside the company essential? What do you think? Are you optimistic about Fiddelke's leadership, or do you believe Target needs a more radical shift? Share your thoughts in the comments.